So we're going to bring in our money men now. Business and market analyst Seth Denson and America's accounting professor at Montclair State University, Dan Geltrude. Good morning to you, gentlemen. Let's talk about this. I know you disagree on it, but the question is a market correction on the horizon? And Seth, I'm going to start with you because simply you seem a little bit more optimistic on the topic.
I don't know about that. I think a market correction is actually headed our way. I think good old Dan over there saying, no, I think the stock market's still the place to be. Here's why I say that, and I will say I've held on to this belief for a while. I was talking about possible market correction back in early 2020 before the pandemic. I thought the United States market specifically were in extra innings. But if you look at the Dow Jones specifically, since the day President Donald Trump took office, it's up over 80%. And we all learned very early on in life that what goes up must come down. We cannot keep this bear market forever. And I think what we saw yesterday was the tipping point that will start that correction.
All right, Dan, what do you think about the future of the markets?
Well, I don't particularly agree with Seth on that. I think a lot of people are out there saying the party has gone on too long. Well, I don't see why the party per se needs to end based upon what we know is happening in the environment. If we go back to what the stock market was doing, let's say in March of 2020, when obviously it dropped tremendously, the stock market has doubled since that time. And during that point in time, or since that point in time, we have not had more than a 10% correction at any time. And let's look at what's happening with the Fed. The Fed is not going to allow the stock market to drop. There's too much at play. Policies of keeping interest rates very low, policies of really not tapering too much. This is all geared towards boosting the stock market. And let's not forget all that on the horizon, all that stimulus that is definitely on the way.
All right, Seth, you say our economy is on the edge of stagnation. Too many dollars chasing too few things. I've heard you say it a few times. Does this rise in inflation mean that the only way to correct things will be interest rate hikes?
Well, the only way to correct things is interest rates hikes in the event we don't get the economy rolling again and people back to work. So, I mean, listen, I tend to agree and disagree with Dan on this, but I think that the issue here is that we continue to pump so much money, the economy can't keep up with it. Yes, the Fed is meeting today and tomorrow. They're talking about talking about changing their monetary policy, whatever that means. But here's the deal. If Democrats ultimately do get some type of stimulus package, let's say it's anywhere near a $3 trillion package, I don't know that the Fed's going to have any choice but to raise interest rates. And by the way, the IMF is already saying the U.S. Fed has to raise interest rates for the betterment of the global economy. I think the Fed doesn't want to do that till 2023. I tend to think they do that in 2022.
All right, Dan, let's talk about how the pandemic has changed everything. How much longer do you think we can hold on to the 0% interest rates?
Well, they're going to hold on as long as they possibly can for a whole lot of reasons, many of which are political, because no presidency, no administration wants to be in place where the stock market is dropping, particularly because Donald Trump did put a lot of emphasis related to what was happening in the stock market during the presidency. So that really does grab a lot of headlines. So in whatever direction COVID goes, whatever direction the economy goes, and the Fed is overstimulating the economy, and we are having inflation, the Fed is going to absolutely resist as much as it possibly can raising those interest rates, even though to fight inflation, you must bring up interest rates if inflation goes for a long period of time.
All right, Seth, let me ask you quickly, because you touched on this a moment ago. The Federal Reserve begins its two-day policy meeting today and tomorrow, releasing that quarterly economic forecast. What do you think we can expect out of that?
I don't think we expect much. I think there's going to be much what we've seen out of the Fed for the last little bit. They'll start talking about tapering by the end of the year. But until we see action out of Jerome Powell, I think it's business as usual. To Dan's point, we have way too politicized the Fed. We got to get out of that. But I don't see that happening anytime soon.
All right, Seth Denson, Dan Geltrude, thank you as always for joining us this morning.
Thanks, Rachel.
Thanks, Rachel.
All right.